studied the life analysis class.
Yeah, yeah, yeah. So I'll be sharing my screen to be analyzing. So I'm not asking some questions. Did you please any today?
Although the trade I placed today didn't work out, so I don't know why. Maybe you can check GBP USD and AUD USD why they didn't really work out. And I want to also ask if there is a red go down news, what do you do? Do you trade after the news or you just follow the technical analysis?
All right. So mostly, basically, if your technical analysis is good, the news will come in your favor. In most cases, like 90% of the time. You understand?
Okay.
So 90% of the time, the news is going to come into your favor once your technical is good. So, so basically, what do you do in your technical? Are you a price action trader, ICT trader, or SMC trader?
Um, for now, I've been learning some SMCMC, but I've been trying to refine it. Maybe you can share your opinion on which one is better.
All right. I won't pick sides and say, okay, this one is better, that one is better, this one is bad. No. Every strategy have their winnings and their losses, right? But having a strategy matters because it will give you more winning than losses. So, but if you're an SSC trader, ICT, price action, just stick to one, right? Or you can just for knowledge sake, just know what others are talking about, right? But if you just know only one of it, right, you can be profitable. Just knowing only one of it, but just for knowledge sake, you might just say, I want to just know what you are seeing, just to add more confidence to your chart, yeah. But just knowing one of it, please, because um, seeing SMC, seeing ICT, seeing price action, they are looking at the same thing, but they are calling it different names. You understand?
Yeah.
They are seeing exactly the same thing, but they are just calling it different names. So what you are seeing as a price action trader is what SMC is saying, but they will call it a different name. You will think, oh, maybe it's something different, but it's the same thing but different name. So that's my understanding from the three of them.
Okay. So personally, are you an extension and I sit on price action?
I'm a basic price action trader. Basic price
Okay,
action.
that means this very nice support I do.
Yeah, I'll share my screen. I'll bring up a naked chart. Then I'll show you all what I use. I use trend lines, support and resistance, high and low of the week, and psychology levels.
Okay. So can you share your strategy? Let me see if I can learn one or two things.
All right. Just let me know once you are seeing my screen.
Yeah.
Okay. All right. So I'll bring up my notes right now where my strategy is, and I'll put it on the screen. Or let me see. Then I'll okay. Let me bring up the chart. You said we should look at what GBP USD, right?
Yeah.
All right. So let's look at GBP USD. Let me bring up my notes where my strategy is. So I'll show you. Oh, okay. This is exactly why I use so documents storage strategy. All right. So let me open GBP USD. I want to open a clear chart so that you see everything you're doing and you can replicate it as well. All right. Can you see this chart?
Yeah, I can see it.
So this is what we'll be using basically. Everything on this list. Can you see this list? So I'm currently on a trade on GBP USD. Let me see if it has hit my take profit. Let's see if my take profit. So I'm currently on a trade on GBP USD. Can you hear me?
Yes, I will see.
Yeah, so I'm buying GBP USD right now. My trade is still floating. So I'll tell you why I bought the GBP USD. Using everything here,
Okay.
right?
Did you take your trade after the news or before the
No, I didn't trade at all during the news. I was trading another pair. I was trading during that news. I was trading AUD USD. But is I opened this trade, this GBP trade this evening, and maybe around 6 or 7 or so. Let me see the time I opened the trade. I opened the trade at around uh, is around 6. Yes, around 6. That's when I opened this GBP trade. So this is
Okay, let's see. Let me see why you entered the
all right. So this is what we'll be using. The things we'll be drawing on the charts is psychology level, trend line, support and resistance zone, high and low of the week. And the things we'll be looking out for is price action moving boards, trend line, M pattern is also called double top for a sell trade. W pattern is also called double bottom for a buy trade. N pattern for our entry. Fibonacci, using Fibonacci as well. Let me add more to this. We'll be looking at candlestick pattern as well. Candlestick pattern like bullish engulfing, bearish engulfing, evening star, morning star. We'll be looking at those stuff. Candlestick pattern, candlestick pattern. We'll be looking at candlestick pattern. So you can actually screenshot this or copy this and paste it in this call, right? So you can just copy it from the on the chat area on this call, copy this and paste it. So you can just copy from there. So I'll add one more to this. Five. We'll be looking at channel. Channel. We'll be adding channel to our chat, our channel. Yeah. So this is what we'll be using. So if three of them are met or four of these are met, we'll enter the trade. I listed how many here? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. But if just three of it is met, just three of it is met, we'll enter the trade. That is how we trade GBP USD. And this is basically price action. You can use this to trade any pair, but it's preferable to stick to one pair or some group of pairs. You understand?
Okay, please, I would like you to also share how you identify your high and low of the week.
All right, I'll add everything right now in the chat. So,
Okay,
firstly, let's start with psychology levels. Or let me copy this, paste it so you can copy it to your notes. Then we'll come back to the chat and I'll start off adding it. Let me come to the core area.
I have screenshots there.
All right, no problem. That's better. So, so let's add the first thing. I actually do it on firstly what I do is I go on the daily to see where the market is going, right? So if you look at the market on the
Yeah,
daily, right, you can see it's on DV period, it's a what? It's a downtrend, right? It's majorly a downtrend, but
this is
just
the weekly chart. Yeah, the
this is
weekly
the
chart is
daily.
that.
This is the daily. So
Okay, daily.
yeah,
Okay,
we have a small uptrend here, a small uptrend right here. This is the third bounce of the third trend line. So we can draw the trend line, right? Let's add the trend line to it. But I want to add it from this list. I don't want to like move one. That's why I don't want to add a trend line. I want to add psychology level first, then I'll add the trend line. So let me start with the list. So we'll go one after the other. Do you understand? So on the 4 hours, if you have any question you can ask. I add my psychology level on the 4 hours. All right. So psychology levels. Do you know psychology levels?
Yeah, yeah, that's 50 and 100.
Yeah, 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 yeah. So you that means you trade price action as well.
Yeah, right now I'm just learning because I know how to identify how to watch there's something video on YouTube
On price action. Okay.
or
But
on price.
okay. All right. But you know why it's important on the chart, right?
Yes, existence. Yes.
All right. Very good. So let's continue. I'm adding it because you already know it. So let me just add. So I want to add the one close to the current chart. I don't want to add so much on the chart. All right. So let's keep on going.
So sorry, do you also still trade or just day trade?
Yeah, I have some setup for swing trading. I have some setup for day trading.
Okay, so maybe because of this lecture, I'd like you to like give me an example of a trade that a setup that you like you swing and a setup that you just day trade.
All right. No problem. I'll do that. So I swing the trade last night till this morning. Um, I'll tell you how I do this swimming. Or I look at before I say, okay, this is gonna be a swim. If you have any question, you can ask. I'm just adding this because you already know what psychology levels are. I also have some videos on YouTube talking about psychology levels as well. All these lists I sent you, I've made videos for them, like the past 1 to 9. I made like I share the videos into series. So I will share the link to the group, to the Telegram channel. Are you in the Telegram channel?
Just the one.
Okay.
Okay,
Uh,
you can share the link so that I can do.
all right, all right, all right. Okay, okay, all right. So this is it. So basically, what I do is I don't actually like to tell you to change your strategy, but since you said you are just trying to learn a strategy, right? As me, you are saying, okay, you are ICT trader. I will say, okay, let's do the ICT. You are essence trader. Okay, let's do the essence. I'll just give you more confidence to add to it. All right. But since you said you want to just learn the price action, so let's do. So we've added from the list. We've added psychology level, right? The next one is trend line. So let's add trend line. Everything on the list, we'll be doing it one after the other, one after the other. So once we're done doing it, you just see the trade playing out. Although this Friday is a holy grail, you will surely have some losing trades, but your losing will be more than your winning will be more than your losses. Uh, okay, you understand trend line, right?
Yeah,
All right. So this is the up downtrend trend line, and that's the uptrend trend line right there. All right. So I've added trend line, added psychology levels. What's next on the list? Let's check the list and see what's next. Support and resistance, right?
Support and
All
resistance.
right. So let's look for support of this current price. So the support is right here. Let's use the rectangle tool to bring that out. This is support right here. All right. So this is resistance up here. Resistance up here. All right. So what else on the list?
I am the
All right. High and low of the week. So this is how we get the high and low of the week, right? So the
yeah.
high and low of the week, you can get this from the 4 hour time frame because the high and low of the week is the first two candlestick that forms on Monday of that week. The first two candles that form on Monday morning of that week, right? The first two candlestick, first two 4 hour candlestick. You can take details of that. First two 4 hour candlestick that forms on Monday morning on the chart. That is our high and low of the week. That's what we use for the high and low of the week. So I'll bring my previous
First 2 4 hour candle.
yes, first two 4 hour candlestick that forms on Monday morning is the high. That's what we use
Wow.
to get
Okay,
the
that's
high and low of the week. All right. So how do I know on Monday, right? How do I get the Monday here? So easily than for me to be looking for Monday like this, I can get Monday using this search. But TradingView help us with this tool, period separator, to help us separate each days from itself, right? So you can come to settings, come to events, come to session break. Once you check second session break, you click OK. Now you can see this broken line on my screen right now. Let's see the broken line.
yeah, can
So on the 4 hour time frame, this broken line is telling me, okay, today this broken line here is telling us this is Thursday. Inside here is Wednesday. Inside here is Tuesday. Inside here is Monday. You can see it below. You can see it down here, right? It's highlighting it down here.
yeah.
Monday. So now the first two candlesticks that form on Monday. This is Monday right here. So where's the first two candlesticks? This one and this one, right?
Okay.
Yeah, so now we use our horizontal rate tool to mark out the highest point they got to and the lowest point the two of them got to. So let me bring out my horizontal rate tool right here. Horizontal rate. The highest point they got to is here. The lowest point they got to is here. Now, high and low of the week also serve as support and resistance zone. That's why we need to add it there. You can see what the price did here. When the price broke above, right? When the price broke above the high and low of the week, what you did when it came back? It tested it and it went higher. Can you see what it did? So higher low will also serve as support and resistance zone. So that is
And the first two candles from
the form on Monday morning. Yes, just come to
first
your
2 4 hour candle.
yes first two 4 hour candle. 4 hour. Take note of the 4 hour. So I'll remove this broken line, this session break on my screen. So you can actually bring session break when it comes to chart settings, events. I've unchecked it. You can just check it from Alice to help you break down the days. So to make it more simpler for you to find the Monday. So okay, I'm taking it out because I've already gotten my high and low of the week. All right. So the next thing we are adding from our list is what?
So if the trade is the prices are above the high and low of the week, you look for buys and it's below, you look for sales. Am I correct?
Very correct. Very correct. Very correct.
Please, can you write this in that notepad so that I can screenshot it?
Okay. All right.
Thank you.
All right. Let me put it down here. Okay. If I'm just type it high and low of the week. If the price breaks above the high and low of the week, more buy trades. Look for more buy trades. Now, vice versa. Let me copy this and paste it below for the sell setup. If the price breaks below the high and low of the week, look for more of sell trades. Have you taken?
Yes, I've screenshot it.
All
Let
right,
me write that the first 2 4 hour candle of the
all right. So let me put it up here. Before our the high and low of the week is the first 2 4 hour candlestick. Very important. First 2 4 hour candlestick that forms on Monday morning. So once you see the first 4 hour candlestick that forms on Monday morning, you look for the highest point they got to and the lowest point they got to, the two of them. So the highest point you mark it out, the lowest point you mark it out. You can use your horizontal rate tool to mark it out, cross it over the week. That's why I use the horizontal rate tool so that you start from that point and cross it to the left hand side. Sorry, to the right hand side. Across to the right hand side so that I'll be able to see that during that week. So in the next week, I'll just take that out and put the new one, right? So that is how it works.
Okay. So for this week, we are looking for more buys.
Yes, you're looking for more buys, correct. But if you're looking for more buys, if you want to catch a bigger move, that's when you look for more buys. But some people they'll be scalping the sell. Like they want to catch the buy. The price doesn't move in a one way direction. If you buy, if you sell, if you buy, if you sell. So people will catch the buy, catch the sell. Like I know of somebody that although it's risky, I won't really advise that. But I know somebody that will buy. Once he say, person will say, once he's buy, person will buy. But it's very risky to do that. You can end up blowing your account. All right, so it's better to catch the bigger move. The bigger move, that's where you make the more money, not the scalping. Although I'm not saying scalper does not make more, but scalpers do. Just understand what's your setup. Once you understand your setup, you are good. Whether you want to scalp, whether you want to day trade, you want to swing trade, just understand your setup, understand your risk management, understand your trading plan, and stick to it, and you are good. So the next on the list, let me bring up the note again. So what's the next on the list? Channel.
My channel.
Channel, very important. Very important. Very, very important. So channel will help us also as a conference to filter our trade for us. So we know where we want to enter, where we want to exit. The channel will help us filter the trade. So now let's add channel to this chart. Now what kind of channel are we seeing here? Right? What kind of movement are we seeing? We are seeing a ranging market right here, right? This market is ranging.
Yes, this summary.
Yeah, so let's use our channel to filter this ranging market. We come here to our tools, our lines. We come to parallel channel right here. We have so many of them here, but this is what we need. Parallel channel. So we come to the charts, place it here, up here. Place all the highs to it, to the markets, ranging markets, and drag it to the bottom, all the bottom. Drag it, let all the bottom touch, let all the highs touch. Can you see that? All right, do you have any question?
the way you drew your trend line,
Yeah.
do you have any mistake using line charts? Do you have any rules for drawing your trend?
All right. The rules. Trend line have rules. Yes. So the rule for drawing a trend line, a valid trend line, right? Because you can draw an invalid trend line. So to draw a valid trend line, the trend line must be touching at least 2 weeks before the current chart. You know, we have two types of trend line. We have the uptrend trend line and the downtrend trend line. Now, for the
Yes.
uptrend trend line, number one rule is it must be below the chart, below the price. The uptrend trend line must be below the price. Number one rule. It must be below the price. Number two rule. It must be touching 2 weeks before the current price. Now, let me give you the expression of that. Now, this is the uptrend trend line right here. This red one below. It must be below the price. Number two, it must be touching at least 2 weeks, two candlestick week. It means what when I say make week, this is what I mean. This week right here. This one name you call it, or whatever name you know it as. You must be touching those weeks, two of them, 2 weeks before the current price. And those weeks must be a significant point, like a significant point, like a support point. Those weeks that is touching must be a support zone, meaning whenever price comes there, it will bounce up. You can see what happened here. Why this trend line is valid because the weeks are selected. Number one, it must be below the price. Number two, it must be touching 2 weeks before the current price. At least 2 weeks. At least 2 weeks. It can be touching two or more, but it should not be touching more than two. Sorry, it should not be touching less than two. It can be touching more than
Um,
two, but it should not be touching less than two. All right, that makes it a valid trend. And the third rule is, it's when price gets to that point, those troughs you selected, right? It must bounce up because when price came here, it bounced up. When price came here again, it bounced up. It must be a valid support zone. Whenever price came here, when price came here, it bounced up. When price came here, it bounced up. You can see that is what makes it valid. And it's touching one, two, three, four before the current price. Now you cannot. Why I say you must be touching two trend line, two drop for the current price. You can draw a trend line like this. Let me show you an example of an invalid trend line. You can draw a trend line like this, right? Can you see this?
yeah.
This is invalid because it is not in the current price. This is already invalid. It was valid at the point, but at this current price, it is invalid. So you cannot draw a trend line like this. You cannot draw a trend line like this either because it is what invalid, right?
Because why is it invalid? Is it because it's not close to the price?
Yes, it's not close to the current price. It is not affecting the current price at all. It is far from the current
Okay, but
price.
I think it was still trading, the price was still trading close to that point, so it
Yes,
became invalid.
yes, to be valid. Like
Oh,
you can call me and draw a trend line like this. This is a counter trend line right here because it's close to the current price. This is one week, second one, and you can see the price here. This is a counter trend line. So this is the main trend line, and this is like a counter trend line. All right. So because it's close to the what the current price. If you're looking for more buys, so whether you are
yeah,
looking for buy, yes. If you're looking for whether, yes, oh, yes, very good. That's a very good observation. Very good observation. All right. So that is the rule of the downtrend trend line. For the uptrend trend line is vice versa. Yeah, vice versa. Yes, yes. Correct. All right. I'll tell you why I bought the BPUS. I'll tell you why I bought it. All right. Okay, we'll talk about that. Talk about the reason why I bought and where I bought as well. We'll talk about. So tomorrow is NFP. So you can either flip your account or blow your account tomorrow, depending on the part of the side you are on. You can either flip your account or blow your account, depending on the part side of the trade that you are on. So in order for us to, yeah, the market should buy. That's what we are expecting. So now let's complete the analysis. We've just drawn, yeah. We're looking for more buy. So let's see where we're going to buy, where we want to enter the buy from, and what we're looking out for. Yes. Okay. The high and low of the week. In some cases, the high and low, the price might not really obey the high and low of the week, right? But in most case scenario, like 90% of the time, the price is going to obey it. Like the price might obey it from observation. The price might obey it um, in 2 weeks. Then the third week, it will disobey the price of price and of the week. Like if you have like 1 week to disobey it, then to obey it more. Yeah, yeah, correct, correct. So yeah, that you're very correct. We're looking for a significant break, right? This was a break, but it was a fake out break because it didn't break it significantly, right? So when it broke it above, we'll go to lower time frame and see what happened there, right? So when it broke it above, if you're looking at the 4 hour time frame alone, you would enter when on this retest. So we're trading a break and retest high and low of the week and psychology level. So to enter on this leg here, this leg that is retesting, this is going to be our entry. If we wanted to trade this, right? This leg is going to be our entry right here. We enter upon this point and trade it to this next psychology level. Someone is trying to join this call. Let me see. All right, welcome back to. Okay. All right. So we are actually analyzing GBP USD. So let's continue. So do you understand what I said? Do you understand what I said? Okay. So now you can see when the price came here, this was when he created the first two. So we were waiting for a significant move. So if we're looking at the 4 hour time frame to see this move, to catch this move, when it came down here and it broke, this is a significant break, right? On the 4 hours, we should be waiting for a retest. Upon this retest, we shoot it to the next psychology level. That should be our 50 pips catch. Yeah. Yes, you have to wait for the retest to enter its psychology level. Yeah. So in the case where the price won't obey the psychology, when the price won't obey the high and low of the week, Once it breaks up, that is why trading sometimes in most cases trading is risky, right? Sometimes it will come here and it will break it. But in the case when you are correct, you catch your 50 pips. That is why when you are risking this kind of trade, once you enter there, once you enter your trade here, your stop loss should be tight, something you can afford to lose. Trading is a risky business here. Although not every business is a risky business. So you put something you can afford to lose. Okay, you are placing a long trade from here, a buy trade from here. Are you willing to risk 20 $2? Let's say you are trading 0.01, right? 20 pips. Are you willing to risk $2? Although my stop loss I like it to be like 18-90 pips. So are you going to risk $2 to catch $50? To catch $2 to catch $5. That is for 0.01 lot size, right? Or if for one if you are using one standard, are you willing to risk $200 to catch $500? If you are willing to do that, then you put your stop loss here, you put your take. Once the trade goes in your favor, if you are someone that likes to stack, you can stack more in that case. You understand? When the trade is going against you and you see that oh you are wrong, right? When you see oh this trade is not really going in my favor, you can leave it to either take out your stop loss or you can just exit the trade in small loss. Since you already know that oh I've risked this amount already, this amount is already a risk capital, a risk money that oh uh, if I lose it, it doesn't shake me. You understand? Yeah. So that is so let's let's go to the lower time frame. We've drawn everything here. So we'll go to the lower time frame and look for remember from this list right here, we've done this first five, right? So let's go to the what we look out for before we enter a trade. Multiple wave rejection, break and retest, second and third of trend line, M pattern, W pattern, N pattern for entry, Fibonacci, candlestick pattern. That's what we are looking out for right now. So let's do that. Go to the 1 hour. So after we do this on 4 hours, we go to 1 hour to look at what we have done in a broader view, in an inside eye view. So you can see what's also always happening here. That's why this channel is very important. You can use channel to actually predict the market direction, but we need other conferences to tell us whether to buy or to sell, right? Now you can see when the market enters this channel mode, right? I see extend this channel to this point. You can see when the market okay upon the breakout entry, all right. You can see when the market broke into this channel mode, right? You can see what happened here. Upon the break of the channel mode, when it came to this point, you can see this yeah, this blue dotted line at the center. It says that support and resistance. When the price is coming from beneath it, it's our resistance. When the price breaks it, it becomes support, right? Can you see it? Can you see it? All right, you can see when the price came here, it dropped. It came to support zone, psychology level, and the channel support. It went up, it broke it after testing it, it broke it up to this point. It came back trying to support, tested, right? It broke it below, came to support. You can see what is happening to resistance, came back trying to resistance, right? Support, it broke it up. It turned to what? It came up to support, came up, down again to support, came up. What are you expecting from here again? From this move you are getting here, what are you expecting for this price to do from up here? To do what? And do what? You can either drop down here or do what? Or go higher, right? Yeah. So you can easily catch this trade. That, oh, let's buy from here, let's sell from here. Let's buy from here, let's sell from here. Can you see how we just predicted that the market is going to go? All right. So that is how it is. How it is. Now let's look at other things we will be looking out for. This is the 1 hour time frame. Remember, we'll make our entry on 15 minutes time frame. What are we looking out for? We're looking out for these things on the list. If you can see three of it, you are good. Just three of it, you are good. If you see psychology level, trend line, support and resistance, you are good. You just look out for end pattern, multiple rejection, and we enter the trade. If you see one, three confluence, you are good. If you see four, fine. If you see five, fine. If you see six, fine. If you see seven, fine. But if you see three, we are good. So upon this place, what are we expecting? Let's go to the 15 minutes time frame now, where we'll make our entry. We already know that if the price come up here, we are expecting the sell, right? We already know that from the for the market movement and direction, right? The ranging market. So let's go to 15 minutes. And predict GU. So you can see here on 15 minutes, this support is number one. The support is what? The high of the week. Can you see the high of the week right here? This yellow line. Number two, the support is also what? Close to psychology level, right? That's two confluence, right? Number three, the support is also this wedge, this channel, right? It's also this dotted line in the channel, this support zone or resistance zone. That's the dotted line. So we have three confluence inside this place, inside support. High of the week, psychology level, and channel um, average line. So I call it the average point of the channel of support and resistance. So we have three confluence here: channel, psychology level, and high of the week. So if we look at this place, we can also see the 15 minutes trend line, right? Can you see that from the, is it from here? Which one? Is it like this? Is it drawing it like this? All right. So this trend line is also valid. Yes, it's valid. So far, it's going in an uptrend. Yes, and below the price. But you can't. Yes, you can't draw. You know, this is not a trend line because it's not moving in an ascending manner, right? Or a descending manner. So you can draw it because this is moving in an ascending manner. So you can call this also a trend line. Yeah. So if you want to know where this price is going to go now, this price currently, right? We already know it's going to go up, right? So we can bring Fibonacci into this case. Upon 618, we can buy. The price is on 618, so we can buy from here right now. But we're going to be catching small peak. Small peak. We can buy on 618 right now, but we're going to be catching small peak. No, this is like you want to catch a little peak. It's good to I'm just giving an example right now. I'm giving an example that if you want to buy right now, you can buy right now because this price is going to get here. Let me show you where this price is going to get before we can see any hesitation. Upon 618 buy, the price is going to get up here. So we'll be risking 3 pips to get 6 pips or 2 pips to get 6 pips. This is like a scalping. This is like scalping right now. So the price is going to get up here. Yeah, yeah, 618 Fibonacci. That's why we are buying here. So you can see on our list we have Fibonacci there. That made us enter this trade. Number one conference is what? It's an uptrend, right? An uptrend. You can see there's a trend line here, right? Can you see the trend line? First touch, second touch, third touch, and so on. You can see there's a trend line here. Number two, bottom down here. First bottom, second bottom from our list. That's two confluence. Trend line, double bottom, and number three, there's Fibonacci. So I told you if you have three confluence, you are good to enter the trade, right? Fibonacci 618. This double bottom. Now for GBP USD, it has a pattern that it follows. It obeys double bottom, double top, end pattern. It even obeys triple bottom. It obeys third touch of the trend line. It obeys second touch of the trend line. It obeys like even candlestick pattern like morning star, evening star, bullish engulfing, all those stuff. So once we see those things inside our zone, that is our confirmation to enter. You understand? So this one, okay, this was the trade I bought. I bought at. I already closed the trade. This evening, I told you by 6 I bought, right? This was the trade I bought at, right here, on 618. Yes, yes. So 0. Okay, now it depends on where the double bottom forms, right? I told you if I see three things, right, I will enter. Three things. I think someone is trying to join. Or someone left. Okay, all right. Let me go back. So, I told you I need to see three things before I enter the trade, right? Three things. Now, if I see three things, if I say a double bottom, I'll count that as one, right? I'll look out for other two things. Other two things. If I see any other two, I'm good to enter the trade. But we'll find an example here, right? Let's look for one example that will have a double bottom. One example. You can see right here, right here. You can see what happened there. Now I'll build out the list and I'll show you what I'm talking about. Now I told you if you're looking for a buy trade, you look for double bottom, right? Double bottom for buy trade, right? Can you see it? Now we look for end pattern for what? End pattern for what? Buy or sell setup. End pattern is our entry. End pattern is for our buy or sell entry. Once we want to enter, we want to see end pattern for GBP USD. Now this is our now let's say number one. I already saw there's a trend line here, right? I already know there's a trend line around this zone because it's already touching here and it's coming down to this zone. There's a trend line here. Do you understand what I'm saying? I already know there's a trend line, so that's number one for me. I'll count that as one conference. And number two, I'm seeing there's a low of the week here, right? So there's a high of the week here, high of the week. I'll count that as two. Do you understand? That's two conference for me. Now number three, right? I will see that okay, there's a channel here, a channel support right here as well. This channel dotted line here, three. That's already three for me. So now what I'm looking out for again, three is enough for me to enter. But what I'm looking out for again is this. My end pattern for entry. You can see when the price came here, right? I'm looking for end pattern. It came up, it gave me the end pattern right here. Can you see this looking like an end? Can you see this end pattern, which is double bottom, right? So I expect this to form a double bottom finally. So I'll just buy from here upon this push. I'll just set my buy here. Once I see this end pattern forming, upon that end pattern, I'll buy from there and I'll put my take profit 1:2. My stop loss is going to be below the psychology level and the zone right here, right? We have like more than six confluences happening here. So that's enough for me to enter a trade. So since I have more than three already, so I know okay, I have more chances in this trade. That doesn't mean the trade can go against me, right? The trade can go against me, but because of this strategy will give me more winning than losing, right? with proper risk management, this strategy is going to give me more winning than losing. So that is why it's a good strategy. There's no strategy that is a holy grail. You definitely have some losing trades, but if you use proper risk management, you're going to have more win than loss. You understand what I'm saying? So 1:2 is risking 11 to get 22 pips. You can do 1:3 as well. This 1:3, and we still hit it. And you can target the next psychology level, or you target, basically what I'll tell you, advise you is target the next hesitation point. Hesitation happens here. Look at hesitation that happened here. You can see this was a double bottom that will give us this sell. But that is what I mean by hesitation. Look at this double bottom end pattern for sell, right? Can you see that? So let me take this one out. Now, I'll explain hesitation. Hesitation is the point where the price resisted, right, before it came down here. Hesitation point was this point right here. Resistance, you have the support hesitation and the resistance hesitation. The support hesitation is the price that the point the price got to before it came back to that support zone. You can see the price came here before. That means this was the last hesitation point, right? When the price was coming back again, it came back to this zone again. Now, if you want to set your stop loss, you set it below that hesitation point. Once you are below the hesitation point, you are good because GBP USD, once it's giving hesitation, once it like it gave an hesitation and goes up and comes back to hesitation again, it's not going to break that hesitation. Anything that makes it break that hesitation, the trend has changed, right? It has changed its form. So you put your stop loss below that hesitation just to make your trading safe. Not because of you want to put your stop loss 20 p or 30 p. No, put it because there's a hesitation there. You put it below the hesitation so that even if the price wants to play around that hesitation zone, it won't take out your stop loss. Do you understand? Yeah. Not I'm not just giving it a breathing room. I'm putting it below hesitation. What I mean by hesitation, now let me give an example, right? Let me just draw something up here. Now, let's say a price came like this, right? The way it's coming like this. It came down, it came up. Let me use a clean chart. Let me use this piece down here. Let's say the price came up, it came down, it came up on this leg, right? Let's say the price came here and you want to buy from here, right? Now, since you are buying from here, this leg, your stop loss should be below this guy that formed here, this last leg that formed here, this last support that happened here. That's your stop loss here, right? You can tighten it, but it should be below this place. It must be below here. Even though this guy was long like this, your stop loss should be below the guy. Do you understand? Then you can target 1:2, or best bet, you should target the next hesitation up here. If this guy was up here, you should target that guy up there. If the guy is down here, you should target the guy down here because that is the next place the price is going to hesitate. You understand? This guy that formed here, so that is it. Yeah, it's going to be below the last hesitation. Yes, below the last hesitation. Hesitation, yes. Yes, last key zone. Yeah, that's another word for it. So that's why this stop loss is like this, and the big profit is there. Yeah, it should be below it, and the take profit should be below the last high that happened here. So you can see our take profit got taken right here. So that's why this one I said we should scalp here. This one I said we should scalp right here. You can see where I put the take profit, right? Below this zone. And you can see the price already heading for it. Yes, yes, below this zone, right here. Yeah. So that is how we do it. So you can see this is like you're gonna take out these profits. You're gonna hit that take profit. So what we are expecting for tomorrow? So do you have any question before we continue? Bato, can you hear me? All right. Bato, can you hear me? I guess Bato is Bato still here? Okay, Bato has left. Bato has left. You can see our you see our profits already taken. It can go higher, but this should be our target. You can see it taking. Take profit smashed right here. And this was one ratio three smashed. All right, so this is like a live example of this strategy we are using, price action. I told you every strategy has its winning and losses. All right, okay. I told you if I see three confluence, I'm good, right? Three, and I already mentioned the three that I saw here. So if you want to add more, you can go to the 5 minutes. On the 5 minutes, you see a bullish engulfing candle here, bullish engulfing. Now let me show you what I mean by bullish engulfing. Candlestick pattern. This is what we see. Candlestick patterns. Bullish engulfing. Can you see my screen? So this guy right here, this bullish engulfing guy, it means there's a strong buy that's going to happen. And when you see that bullish engulfing, you don't just look at it anywhere. You look at it inside that zone. So we look at this bullish engulfing inside our zone. If you're going to find it, let's go back to our chart and look for yes inside yes inside this zone right here. Wait, let me bring some back down. This zone right here. This is leg of this guy. Let's go to 5 minutes. And you see bullish engulfing there. So if you want to look at more confluence, you see it. And look at bullish engulfing right here. So you can wait for this bullish engulfing before you enter as well. That's this bullish engulfing. Can you see that? This guy, can you see this guy here? Is the guy that is here for bullish. Can you see it here? So that is another confluence you can add, right? You can also add it that okay, I want to be really sure. I want to have like double more confluence. Just look at the bullish guy. Go to lower time frame, you see a bullish engulfing and then you enter. Below this guy, yes, yes. Below here, yeah, yeah, yeah. So any other questions? All right, all right. So this is basic price action. You can see it got smashed and the candle is melting. Now that is why we need to put it below the last hesitation points right here. Hesitation point. So we would have made some profit this night just using this signal right here. Right, it would have made like a good profit. Actually, as I was taking the class right now, I took the trade. I took the trade as I was saying it. So it already hit my tip. I took the trade when I was plotting it there. I saw the opportunity, so I took the trade and it already hit my tip. Just like a scalping pump. All right, so let's move ahead. We've listed everything on this chart. Once you have this list, right? This list, you are good to go. You are good to go trading any pair, but you need to stick to one pair. Like for trading GBP USD with this list, you are good. Now, if you are, I know you said you're learning other strategy, right? You can also add that as a confluence as well. Just that they'll call it different name. Like for example, what is here for SFC and ICT, they'll call here fair value gap. They'll say, oh, there's a fair value gap resting here, and there's a fair value gap resting here. So the price is gonna go up and retest that fair value gap. The price is gonna go up. It's created a fair value gap here. It's gonna go up and come back to retest that fair value gap before going higher, right? That's what ICT will tell you. You know ICT, right? Or SMC. You know about fair value gap. So they'll tell you, oh, when the price break a structure, this is a break of structure here. BOS, break of structure. When price breaks a structure, it's going to create a fair value gap. And whenever price goes up, it's going to come out to the that fair value gap before going higher. That's what SMC will tell you or ICT will tell you. ICT will tell you fair value gap. ICT will tell you the price broke an internal liquidity and going to create an external liquidity and so on like that. That is their term, but they are saying the same thing. Do you understand? They just be giving you languages, but it's the same thing they are saying. Just they are different terms. Just anyone you understand, just stick to it. Assuming wait, I also understand your question. Is it this one you're talking about or this one? This one? Okay, these two. These two. Okay, now this is a double bottom, right? Now we have two type of double bottom. Let me explain double bottom. We have double bottom that is, let's say this is a let's say this is a psychology level or a zone. Or let me remove the arrow. Let me use this. Let's say this is a zone right here. Can you see this? Now this is one example of a double bottom. Double bottom is like this. This is one example of a double bottom, right? Now the second example of a double bottom is double bottom on the trend line, right? You can see it like this. It can come like this. It has two ways to come on the trend line. It can come like this, and it can also come like this. Can I see this? All of them are double bottom. All of them are double bottom. All of them. This is double bottom. This is double bottom on trend line. All right, let me take this one out. I'll answer your question. So assuming I was taking this trade here, this one here, assuming I was buying here. Now number one, I will enter this trade is what I see there's a break and a retest of this zone. I'll use my feed level. I'll use my Fibonacci to enter on 618. So upon 618, that's when I will take my entry right here. I'll take my entry. Let me remove the Fibonacci right now. I've gotten my entry. So now I'll put my stop loss below his last situation right here. Below last situation. Like this. I can tighten it like this. Can I see it? And I put my take profit on this situation last here. Below the last situation. I can tighten it like this, but it should be below it. Then my take profit will be on this next situation up here. So the question I'm going to ask myself, am I willing to risk 7 pips to get 11 pips? If I cannot risk it, I will not take the trade. Yes, yes. But if I can risk it, I'll take the trade. So that is it. Yes, yes. So that is what we'll be looking out for. Let's look out for where we want the price to get to, so we can ride the get price. We can take use risk small to get more. This one I did there just scalping, right? I'm looking at this price to get this psychology level, so I can target this psychology level from here because that is my final tip here. Psychology level. This price is gonna get psychology level. That's what I'm anticipating. And when price gets psychology level, when the price get there, I want the price to break it and form like these guys. These guys that is here. Let me remove this one so you can see the chart. Making the chart, yes. So I want the price. Let me take this one out. I want the price to form. You can see what the price did here. Came up, came down. Then the last point, the next point he gave to the psychology level is here. It came down again, like an up 25. I want it to come to psychology level again. This psychology level right here. I want it to come to this zone. Can see this channel. This blue line operates the channel. Once it gets to this channel, I'm going to sell from there down again, or sell it to this trend line. Sell it to this trend line here of my TP here. So what I'm looking out for is this sell. Some other person can be predicting buy, right? So that's why the trading is like that. Somebody can be saying buy, somebody can be saying sell at the same time. I put my stop loss below this last hesitation here. So this will be a tight stop loss for me, right? Now I'll target this one. Yes, I'm trading the range. Yes. Now what will be my confluence here? My confluence number one is going to be what? Psychology level. That's number one. Number two is going to be what? Resistance zone. That's number two. Number three is what? Channel. That's number three. Number four is this trend line. This trend line is passing above. Trend line is going to affect it. So that's like number four. Then I can add more. Number five, I can add more. Let me see. I can add more to it. Then I'll look at the candlestick formation that will form here. Like you can see what happened here for this cell. It's formed a bearish engulfing. This is a bearish engulfing right here. Can you see this thing? Bearish engulfing for a sell trade. This is what I would also like to see. Now, if you go to that picture, you're going to see it there. You can see a bearish engulfing here. Look at bearish engulfing for a sell trade. Can you see this? So that is what happened here that made this sell massive. So if I don't see it here, I go to lower time frame, like 5 minutes, I'm still going to see it there. People now will see it up here. So let me circle it and let's go to lower time frame and let's look for this bearish. So I'll read the circle to know the point. Go to 5 minutes and you can see on 5 minutes, let's look for the circle point. Look at the 5 minute circle point right here. Now on this 5 minute circle point, what are we seeing here? We are seeing an evening star formation, which means a reversal. This is an evening star here. Now this green, red. Now, I'll show you an evening star right here. This is an evening star right here. Can you see it? This guy. So it means a bearish reversal. That means it's going to sell upon this resistance zone. And before we saw this evening star, what did we see here? What did we see here? Bearish engulfing. So you can see we saw bearish engulfing and evening star again. Two of them. I'm going to sell. I might just sell from this next candlestick. If I see it, I'll just sell from this next candlestick formation. Sell from this next candlestick. My stop loss will be below the last hesitation. I'll take off it be 1:2, or I'll target the next hesitation. This is the next hesitation right here. I'll target here. So this is already 1:. You can see how the trade out. Take profit, take gain. So that is it. It's more easier to no one will go once you're on live on your live account, you become more emotional, right? So we tend to practice it on the live account. Like this practice we did this night is a very good example of practicing on a live account. Yeah, yeah, it's recorded. All right. So I'll send you the YouTube. I'll send the YouTube link to you. So we are currently live on YouTube. All right. All right. So one wants to apply this on a chat, like on a live account. Yeah, that is when your emotion comes in. You start to see how should I enter this tree, should I not enter? That is why sometimes I will advise you if we are online, you can come on live here, analyze the chart, enter it, and we'll see the profits happening together. You understand? When we see hesitation, we jump out. When we see, although we are targeting the hesitation point, so it won't hesitate until it gets to that point. Like this point we targeted right here. It won't hesitate until it gets to that point. Now, I'm expecting it to break up to this zone, right? Then I'll be looking out for a breakout to this point for itself. So that is what I'm looking out for tomorrow trade. But the price to get here, give me a bearish engulfing just like this guy, then I'll sell down to this hesitation point, which is like one ratio. This is like 1:4. Is it or 1:5? This is like 1:5. All right, so I'm taking the sell trade. I told you if the market is buying or selling, you can either buy or sell. Now the market is your friend. The market is your friend. Now we are in a bullish trend, but currently we are in a ranging market. A bullish trend, but currently in a ranging market. So I'm trading the range. You understand? I'm trading the range. Yes. So we can actually pick out a small ranging market inside this one. Let me take this guy out and I'll show you a small ranging market. This is 15-minute time frame, right? You already know this ranging inside here. So let's bring out a small channel for this guy. I'll change the color and we'll look at the smaller part of it. That is, we want to catch the small move. So let's look at the small part. This is it. So this zone right here. Pick it up like this. Can you see this? This is what we're looking at. Let me change the color to green. Green. It's not even significant. Let's change it to something different. Okay. All right. Can you see this? So see the way the price is moving around it. So we can also look at this as well. You can see when the price came down here, it sold, right? When it came up here, sorry, it bought. When it came up here, it sold. When it came down here, it bought. When it came up here, it sold. When it came down here, it bought. So you are targeting for it to come up here and do what? And do what? And sell, right? So that's like, yeah, you are trading the channel. So that's why I'm saying this price is going to go up here because of this channel following this trend. And we'll be expecting a breakout soon, but we don't know when that's going to happen. So that's why we need to put our risk management in check. Our risk management is very needful to be on check. So when the price gets up here, and once it gets up there, you can shoot. So this is a channel inside a channel. Can you see that? We already placed this trade out of this big channel, right? But in the small channel, you can also see the trade is still also a valid trade inside a small channel. Can you see that? It's also a valid trade inside a small channel. So we have different conferences telling us this is going to be a good trade. But it might still go against us. But you can see the same confluence that made us win this trade, this small trade this night. This small trade with I took here, but I took the trade on my account and the trade went well. So that is how we just do it. These simple things that we look at, the simple things we will see and we just trade. So the secret to trading is that there's no secret to it. Some people believe, oh, there's this big secret to trading. What? The only secret to trading is your risk management and your trading plan. That is something you create up for yourself. And experience. That's the secret to trading. Your experience itself is part of it. But apart from that, if it's strategy, strategy is not, there's no secret in strategy. Yeah. Yes, you can wait for the price to come back here. Yes. Once the price come here, you can buy and expect it to break even higher. Yes. That's what we're expecting. Now the price can come even up here and break higher. Remember, the price can come here and break higher. You understand? And not come back down. Do you understand? But before I will enter this sell trade, what am I looking for? If I see this bearish engulfing here, I will enter for the sell. But if I don't see bearish engulfing here, I will not enter. Do you understand? If I see multiple week rejection here, I'm going to enter. But if I don't see multiple week rejection, I'm not going to enter. Do you understand? Yes, for entry confirmation. If I see end pattern here, I'm going to enter. But if I don't see it, so I have different things I look at. If I don't see end pattern, I might see bearish engulfing. I'm still going to enter. Because if I see a bearish engulfing, I'm definitely going to see an end pattern in the lower time frame. So I'll just enter there. If I see an evening star, I'm going to enter. If I see multiple rejection, I'll enter. If I see any of these bearish move, if I see any of these guys, any all these bearish guys inside, I'm going to enter. If I see a doji, I'm going to enter. Dragonfly doji, Gravestone doji. But what I'm expecting is the Gravestone doji. If I see this shooting star, I'm going to enter. Any of these bearish guys on that zone. They must be on the zone. That's why we trade only in the zone. Trading in the zone. So now you asked the question before we started this class. Yeah, you said, how do you know the trade that you're going to swing? How do you know the trade that you're going to scalp? How do you know the trade that you're going to day trade? All right, all right. So I'll now this for this GBP USD trade. This is a scalping trade that I did just now. So that's a clear example of scalping. If I want to enter this trade again, how do I know it's scalping trade? I'm on 15 minutes time frame analyzing, right? I know I'm going to scalp because of the time frame I'm in analyzing. If I make analysis on 15 minutes, I know it's either I'm day trading or I want to scalp. Do you understand? So it depends on my time frame that I made the analysis on. Now this is an example of, I'll show you an example of a swing trading on this GBP USD. Now for scalping, I can see I want to scalp right now. This is a retracement, right? I'll bring my Fibonacci and say, oh, I want to scalp. Let's see if 618, and I'll enter the trade on scalping. If this price comes 618, I'm going to buy on scalping. I'm going to scalp this buy. Just happening. Okay, the call is, he said the call is going to if this link expires, I'm going to share a new link so you can join. You're on Friend Forest WhatsApp, right? All right, all right. So if this price comes to 618, I'm going to buy or set a buy limit there. I'm going to target here. This is scalping. This is me trying to scalp. I'm going to put my stop loss below this last situation. Now this is me trying to scalp. Then I'll delete this guy off. Now how do I know it's scalping? I'm actually doing this on 15 minutes. That's number one. Number two, this move, I already know that this move is going to be a small move, a small catch, right? You understand? I already know, okay, this is a small, this is 15 minutes time frame, this is a small move. So this is number one. I'll look at my confluence. I'm having Fibonacci 618. I know it's scalping because the time frame is a small time frame, right? And it's a small move I'm expecting. Just one candlestick can smash this guy. And just one candlestick can take out my stop loss. I'm having Fibonacci 618. I'm having trend line. I'm expecting it to come to this trend line zone and bounce. Come down to this zone and bounce. I'm having that's two. I'm having what? A support zone around here. I'm having a support zone around here, right here. There's a weak rejection here. So I'm having Fibonacci trend line support zone. That's three. Um, what are we having again? If I got to lower time frame, I might be seeing a bullish engulfing here in 5 minutes. This is for scalping because of the time frame determines what you are doing. You can see a bullish engulfing right here. Bullish engulfing right here on 5 minutes. So if you want to be scalping, you go to 15 minutes, 5 minutes, um 5 minutes, and 1 minute to do your scalping. You can look at your overall trend on 1 hour, right? Go to 15 minutes to look at the trade, 25 minutes, 1 minute to enter your trade. You can see weak rejection here, meaning the price is willing to go up. I'm seeing Fibonacci 618. That's why I'm making the entry there. I'm seeing a support level here. I'm seeing trend line that the price is going to come and do like this. This is just, I don't know what the price is going to do, right? But this is just an anticipation, a prediction, right? So this is what a prediction we are making that okay. The price might not get here and go up, fine. The price might come here and break this guy. So is it what I'm willing to risk? Am I willing to risk this amount, 3.4 pips to capture 4 pips? This is scalping 1:1. This is scalping. But if I want to take it higher, I'll put it 1:2. I want to target this execution point. It's more safer for me. But if I'm not willing to risk 1:1, I will just close this trade. I will not go place the trade at all. But if I'm willing to risk 1:1, now if you are placing your risk to reward, if your trade is 1:1, right? If you are comfortable with it, you can place it. But if your trade is 2:1, is a bad trade, right? The trade should be 1:2 or more. But if you're comfortable with 1:1, you can do it. But your trade should be 1:2 or more, right? But if your trade you are risking two to get one, that is don't please just know that you are using a bad strategy and you are placing a bad trade, right? Use a strategy that will give you 1:2, or wait for your entry in the place where you get 1:2, 1:3, and so on. But if you want to do 1:1, fine. If you are comfortable with it. So this is like a scalping. We go to 5 minutes, we go to 1 minute to scalp. So you can see what's happening in 1 minute. You can see support and resistance happening here. So you can see on 1 minute we are having a zone here, a support zone right here, right? You can see right here that the price broke a structure here, right? If you are using SMC, right, and since you are an SMC trader, you understand what I mean by it broke this structure and it's leaving a fair value gap to come and test. So that is the pattern. But if we were on 1 minute, I would have caught the trade right here on this leg. This would have been my trade here if we were on 1 minute because this was the retest of the fair value gap for SMC traders. My stop loss would have been below this guy here. So I'll be risking 1.7 to get 4.6 pips. So because this trader will enter it because if I check Fibonacci right now, it's only giving me around 618 level upon the retracement. Okay, okay, this should be 618 level right here. Okay, it came up to this zone. This is retracement here. This was 1.28. No, I won't even take this trade because it's not. But for the FVG, if we're using FVG, you cannot say okay, FVG is number one, break and retest is number two. Then I will be removing Fibonacci from this from the since Fibonacci zone is not there. I'll also use break and retest of this resistance turning support, FVG retest, that's number two. Then I'll be using bullish engulfing candle and I'll just enter. Right? I'll also say, okay, this is bullish engulfing, but this is scalping. Me, I'm not I don't go scalp. I don't do scalping. Yes. All right. Break and retest, yeah. If that's really break and retest, make sure you add other confidence to it. If that's really only break and retest, you must have a big stop loss, like 30 pip stop loss, right? 30 pip or more, you can have 50 pip stop loss upon break and retest. So if you are trading break and retest, you make sure you add other things to it. Let's use for example, right? So have I explained the scalping part for you? I'm gonna explain that. Yeah, yeah. All right. So, all right. So you can also use these guys. You can screenshot this. Where is this one? How do I take this one out? Or you just go to your website, your Google search for cargo slip pattern, look for this picture and just save it. Or just save any other one that is there. Uh, so I need to check out, look for all those things on inside the zone alone. All right, so let's look at the higher time frame. Now, if you want to day trade, explain swing trading. If one day trade is this, we go to 4 hours, let's like we have done other parameters to see the direction of the trend. Parameters like the trend line, psychology levels, support and resistance, high and low of the week, and so on. They will come to 1 hour to look at. Let's go to 1 hour. We want to 1 hour to look at where the current trend is going. We've seen the main trend on 4 hours. We come to 1 hour to see where the current trend is going. You can see the current trend and uptrend, right? We want to day trade. We want to catch the trade, but in this the way this chart is going right now, if you want to day trade this, is to catch the bigger move. That is, we want to catch it when the price comes down here, or want to catch it when the price is up here, right? So day trading for this one, for a ranging market, is more likely very a bit risky. You can only do a good day trading on a trending market, but a ranging market, you need to be taking the move. Like it might take you a day, you might actually day trade it, or it might go faster. It can actually go very fast, but trading in 15 minutes is actually 1 hour looking at your trend, going to 15 minutes, it's day trading. Now, why do I call 1 hour day trading and 15 minutes our entry for the trading? This is it. 1 hour meaning every candlestick that forms here is forming every 1 hour, right? Let me take this arrows out. So now this is how we know we are day trading. You can see this is 1 hour, 2 hours, 3 hours, 4 hours, 5 hours, 6 hours, 7 hours. That is 7 hours in a day to hit to take from this bottom to this top. So if you are trading from here and this is your TP, if you take 7 hours to hit your TP within a day, that is day trading. Do you understand? So why the lower time frame? If you take like in the 1 minute, if you take like 1 minute to move the candle, each candlestick movement. So that means you are scalping because you are scalping within 15 minutes. You already hit your TP because every candlestick is 1 minute. So if that's only 5 minutes, if you take 5 minutes for each candlestick to form, so if it's going to your TP, within 30 minutes, 1 hour, it should have hit your TP because that is also scalping. But the trading is to take like maybe 3 hours or 2 hours or more. 2 hours, 3 hours, 4 hours to hit it to get to your TP. So that means you are day trading, right? So if there's something like news, right, it might go faster. If there's news that went to your direction, the news is very volatile, right? It might not move to your direction, but if you want to day trade, you look at the trend here on 1 hour, right? You already know that okay, this is takes 7 hours to make this. Even coming down here might take even more hours because each candlestick here is 1 hour. You want to catch this trend. Let's say you want to catch the trend from down here. You want to catch this trend from down here. That's day trading. You want to buy from here, right? This is day trading for this bottom here. Your TP is this next situation right here, up here. This is your TP zone. So this is day trading right here. Because before the trade route from here and gets up here, this is every 1 hour, 1 hour, 2 hour, 3 hour, 4 hour, 5 hour, 6 hour, 7 hour, 8 hours, 9 hours forming right now. And it has not gotten to your TP, right? This is day trading. So that is how we know we are day trading or we are scalping. Do you understand? So you go to the higher time frame to see, okay, this is where I want to target, this is it, okay, this is what I'm going to call it. That's how you know the difference between day trading and scalping. Yeah. So now, if okay, if the market is at 20 pip, let's say you are targeting this is 38 pip. Now you can say you can bring it for you can say to yourself, okay, if I'm targeting 30 pip, this market is at 10 pip profit, I'll move it to break even. So 10 pip is around here. 10 pip. This is 10 pip. 10 pip, you move it to break even. At 10 pip profit should be at break even or small profit. Then your stop loss, your take profit will be here. So if the market go against you from here, you're running a risk-free trade, right? If it goes against you, fine. If it goes in your favor, fine. So at 10 pip profit. So if you are targeting a larger pip, like you're targeting 50 pips, you can say at 20 pip profit, I'll move my stop loss to break even. Yeah, I'll share a new link. How many minutes will it take to end? Okay, I'll share a new link. Let me create a new link right now and I'll share it on the group. So once this one ends, I'll just tap in on the second one and join. I've created a new link right now. I've created a new link and I'm sharing it right now. Okay, so you can you can use the Telegram link and also uh see we signals on the Telegram as well. Right, I'm sharing it on WhatsApp as well. Right, so I'm sharing it. I've shared it. Have you seen it? So I think this one has ended. Let's return to home screen and join on the second link right now. All right, welcome back. Yeah. So I'll share my screen and I'll continue from our stuff. Just let me know when you can see my screen. Can I see my screen? All right. So as we were saying, do you have any questions before we continue? So welcome, Mavis. Mavis, welcome. Okay, so you said I'm explaining some concept that you don't understand. Okay, okay, all right. So I hope you understand the concepts now. All right. So Mavis, we were doing an analysis on GU.
Okay.
Yeah. So Mavis, did you trade today? Like did you trade earlier today?
No, 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 no.
All right. So what pair do you want us to look into? Maybe you want to trade tomorrow or something.
I would like to exactly
J JPUSD. Okay, that's what we're looking
yeah,
into right now. GBPUSD. All right, GU. So we are predicting. Although we are not actually predicting, as price action traders, we don't predict. We wait for the price to do what it wants to do, then we act. We wait for the price action, then we react. So that's why we are called price action traders. You see the price action, we
okay.
do the reaction.
Yeah,
So if the price gives us an action, we react to it. So that's what we are basically do. So
okay.
as we were saying, Mavis, I guess we've talked about all these concepts, right? How all these things are added to the chart. Do you understand how why all these things are added and how
Yeah,
yeah. So
I understand the blue line.
all right. This is what we are using basically. Everything on this list is what we are using.
The figure of
Yes.
the line support and Mr.
Yeah.
Lower
Yeah. Channel.
channel.
Yeah, you can call it parallel channel.
Yeah, I understand what you're saying. So the price action is not understand that price action.
All right, you can take a screenshot of this. Take a screenshot. So, psychology level. Can you tell me what you understand about psychology level?
I not just use that. I just think I understand about the consider what one price is that then get it to the upside.
All right, save as support and resistance. Very good.
Yeah,
So, the significance of psychology level is that we as human beings, we like to buy and sell on psychology levels, right? Round figure, I want to sell on a round figure. Psychology level is very important because this price you are seeing is people that are buying and selling. They are human beings buying and selling, right? And human beings they are very comfortable to buy and sell a round figure, right? Like if you want to buy something right now, you want to buy it maybe on a round figure, like you want to buy it like maybe 15 naira, 100 naira, 200 naira, and so on like that, 250 naira, and so on. That those are round figure. If somebody wants to sell something
okay.
to you and the person is telling you this thing is 19.98 naira, how are you going to buy it?
Come again.
If you want to buy something right now, book is 19.987 naira. How are you going to buy it?
19.8,
Yes, 19.987 naira. How are you going to buy it?
19.78 naira. I will buy 19 point.
So you see, the money is even scattered. You're almost saying 19 point. It's scattered. The what the person is saying to you is like the person wants to confuse you because the money is scattered. So instead of you dealing with that kind of person, you will instead go to somebody that wants to sell it for 20 naira because the money you understand 20 naira more. You see, 20 naira is round. You understand? You are more comfortable to buy on on a round number. Even if you go to a store like a supermarket or a shop price and they are writing on the bill of the thing that okay, you want to buy a bottle of Coke, I think a bottle of Coke is 79.99 naira. So at the back of your mind, you already know that okay, this is 18 naira. You are not even thinking about the 99 that is there. You understand? You wouldn't be asking that why did they have this 9 naira? Why did they just say it's 18 naira? You understand? Because you are more comfortable trading or buying or selling on that round figure. So that is why it's very important on the chart. So psychology level numbers on level on the chart are those round numbers that are on the price chart that people are comfortable trading on. Just like on your normal marketplace, when people are more comfortable trading on a round figure money. You understand? That is the same thing that what price action like that's what psychology level does on the chart. That is why whenever price goes psychology level, it's reacting because people want to enter the market at that time because they are more comfortable entering the market, buying and selling at that time. You know,
Okay.
you know understand that's the basic reason why price action psychology level is important. You can see when the price came here, you can see people are comfortable to buy. That's why people are buying here. People are more comfortable to buy here. When the price came here, people are more comfortable to sell. That's why it's selling from here. When it comes here, when the people bought and sellers got it, right? When it came here, why it's reacting is because more people were comfortable to buy at this round number here, 1.26500. You can see the round number is not scattered like other ones. People are more comfortable to buy at this zone. That is why we have to mark it out and say, okay, since people are more comfortable to buy at this zone, let us join them to buy so that you can catch those profits from the buying trades, right? So that when they start buying and the market starts gaining value, that starts rising, you can catch those was profits when we sell at the higher part. Because when we close a buying trade, that means we are selling.
Okay.
Yes. So that is why psychology level is really important. So I hope I've explained psychology level.
I have understand.
All right. Any questions? If you can hear me, is it clear here?
Yeah, no, no question. I'll follow you, sir.
All right. All right. So that's why psychology level is really important. So are you jotting down? Are you writing?
I'm taking the screenshots.
Okay. So the trend line. This is trend line right here. So trend line have rules. Number one rule of the trend line, we have two types of trend line: the uptrend trend line and the downtrend trend line. So the uptrend trend line, right, is the rule for uptrend line is number one. This is an uptrend trend line below the chart, but it's telling us the how well the uptrend is going. That's why we call it uptrend trend line. It must connect the lower highs, the lows, sorry, the higher lows, right? This is a low here. This is a higher low, higher low. It must connect higher lows. That is number one rule. It must be below the chart. Number one. Number two, it must connect higher lows, higher lows. This is a low, higher low, higher low, higher low, higher low, and so on like that. So number one must be below the chart. Number two, it must connect higher low. Number three, a valid a valid uptrend trend line must touch at least 2 weeks before the current price. Now, for example, this is what I mean by week right here. This is a week. This is a week. I guess somebody's trying to join. All right, welcome, Isaac. Isaac, good evening, sir. How are you?
Maybe, but
So, how was your day?
I'm fine.
All right. So, did you take any trades today?
I think USD card, I think it's still.
That is the trade I dropped, right? On the Telegram channel.
Yes, sir.
All right. Hope you took some profits.
Yes,
All right. Very good. Very good. All right. So, that's a very good one. The USD card went really well. I guess I dropped another trade that went well again. The AUD USD. Did you take that trade?
no, I didn't.
Okay.
Only online.
Oh, AUD USD also went well. That was a very good trade. I dropped it this evening, I guess, around the evening period. So, the analysis for AUD USD, this is it up here on this page. That's what we got the analysis AUD USD. So right now we're doing a analysis, live analysis for GBP USD. Where's going to go next? Yeah, so any trade we drop tomorrow is going to be from this analysis we do here. All right, so you can actually see how the analysis are being brought up. It's not really something difficult, but it just needs consistent practice to be able to spot some things, because in some cases you might look at the chart, right? You won't see those opportunities. But once you consistently practice, once you look at the chart, you just see the opportunity just present itself. You just see like, man, let me not miss out on this shoot. And you just shoot from there. So that is it. That's what we're looking out for. So so let's continue with the class. If you have any question, you can ask before we continue. Any questions? Do you have any questions? Isaac, Igwe, Mavis, any questions?
No, I do have a question.
All right, so let's pick up. Let's pick up. All right. So let's continue. So the markets, I guess some brokers are closed, so they won't allow you to put any trade. So Isaac, what pet would you like us to look into? What pet do you trade?
Bitcoin.
Bitcoin. All right, all right, all right. That's a very volatile pair. All right, so no problem. We'll look into Bitcoin as well. So let's finish up with this list. Everything on this list, you can screenshot this list, Isaac. Everything on this list is what we use to analyze Bitcoin. Yeah, everything on this list. Yeah, then we know where Bitcoin is going to go next. We're going to see it. We're going to say we're going to see it, but we can actually be wrong sometimes. That's why it's risky, right? But because we have a strategy and a risk management and a trading plan, we have more leverage in the market. So we have winning than losses. But that doesn't mean we won't have any loss. We'll have loss. Yes, trading you can't eradicate loss, but managing your risk is more important. In trading, strategy is like 10%. Strategy, your trading strategy, all these things you are saying here, that is strategy. is percent of trading, right? Risk management is 60%. Sorry, risk management is 40%. Is sorry 10%. Risk management is 20%. That's 30%. Risk management is 20%. Trading plan, your trading plan and trading management is 10%. Then your trading psychology is 60%. Now, trade psychology, that's what governs your trading. How do you react when you're in the trade, right? That's what makes us either lose or win in trading. When you come here, if you are saying this thing, you say, oh, it's gonna buy, it's gonna buy, it's gonna buy. You just come and shoot buy. You're not waiting for your setup. That's fear of missing out. FOMO, FOMO, fear of missing out. You want to come, you want to shoot. Like I know this is gonna buy to this place. You don't have any maybe you have a strategy that's working that okay, it's gonna buy to this side. But you didn't wait for a complete setup, right? Your complete setup, you just bought, you're gonna lose in that trade. Fear of missing out, or maybe you know that okay, people are saying GBP is buying, GBP is buying now, GBP is buying now. You just jump into the chat and maybe GBP have already bought, right? And if you buy at that time, your stop loss is going to be a very big stop loss. And you didn't look at the chart, you just went to buy on a resistance zone. The price was getting to the resistance, you now bought on resistance zone because you're scared of missing out on the trade. You also want to catch, you want to join the ride. That is FOMO. That is part of your trading psychology. Another thing part of your trading psychology is when you enter a trade and you're having drawdown, right? And your trading plan, you don't have a steady trading plan. Having a steady trading plan and sticking to it is part of your trading psychology. You're feeling emotion that this trade is giving me so much. If I want to see $1 profit, I'm going to jump out. And when you see $1 profit, you jump out. The trade now give like 80 pips, or maybe you saw 10 pip profit, you jump out. The trade now give like 80, 100 pips. You'd be like, if I knew I would have stayed on this trade. And in the next trade, you continue the same thing again. So that is psychology. So you have to pay attention to that more, right? Everything on the 100% list, everything is important. But psychology is something you need to pay more attention to. Strategy is very hard to get, it's just 10% of it. Like this list you have here, this list you have here is strategy already. Once you understand everything here, which I'm going to explain, it's already a strategy. So why the rest? The rest is you have to experience the rest. It's something you learn. I will just tell you, okay, this is what you will be expecting to face, but you will have to learn it for yourself. The experience can't be taught by someone. You have to learn it for yourself. But you just but you just know that the experience is definitely gonna happen. But you have to learn it for yourself, like feel the process and make sure you trust the process, right? Trust the process because before you know it, you just be like, and before I was not this profitable, but now I'm flipping cash like you you're printing money from the forex market. So that's how it is. So do you have any question before we continue? Or should we just go to the BTC chart and input all this in and I'll explain it from there? Any question?
Yeah, so I think we should explain um those entry setup with examples on the chart so that we can just
All right,
get it. We can understand some of them.
all right. So it's not preferable if you have a notes, so you can be able to write down, so you don't forget any of this stuff. So this is the BTC chart. I'll clear this chart, everything on this chart, so I'll have a blank chart, then we can start from afresh. All right, so this is a blank chart right here. BTC. This BTC is very volatile. There, but if you can catch BTC, you can actually flip your accounts to 300% in a day. if you can manage the risk, right? You can manage that risk. All right, Franklin, welcome. Franklin, how you doing? How are you, sir? Franklin, can you hear me? Franklin, can you hear me? You can unmute yourself, Franklin. You're muted. Click on the mute icon on your screen on your phone. You see the audio icon. Click on it and unmute yourself. I guess Isaac already left the call. Isaac has left. So it's Isaac that said he wants BTC, right? Isaac that said he analyzes BTC. Franklin, you can unmute yourself. Click on the mute icon on your phone and unmute yourself. I can't hear you. All right. So if you have any questions, just unmute yourself and ask. All right. So Isaac is not here. So should we still analyze BTC or should we leave it? Since Isaac has left. Or anybody here trade BTC?
You can analyze it.
Do you trade BTC? Yeah. Do you trade BTC?
They but not to
Okay. You go, do you trade BTC?
as long as it's that I like to know what's happening.
Okay. You just want to know what's happening, but you don't trade it.
Not actively.
All right. All right. So should we look into it or should we just go to our GBP USD or maybe
No, we
some other
should.
pair?
We should check. No, we should follow the steps we are used to analyze
Okay, we should follow it
the
here.
to use it. Yeah, so that
Okay.
we simply.
All right. All right. Let's use it for BTC USD. But should we choose a different pair instead of BTC USD or you want us to use BTC USD?
So BTC is fine. It's a clear trend. I can see a clear uptrend.
Okay. All right.
But
All right.
the problem I'm seeing is that the don't usually fall double top or bottom. So
Okay. That's why this is important. You understand? This is important, but
yeah,
we'll look at what is forming. If it's giving us double top, double bottom, we see it. It's not going to so far as the chart, we're gonna see it. We are here together, we're gonna see it. All right. So let's bring out the list. What do you have first on the list?
that is
One is what?
psychological levels. Yeah.
All right. So let's add psychology levels to this. Mostly before our time frame, right? So difference of 5 or 50, right? Or 500 for BTC, right? So this is so the current price. Psychology levels to the current price. Where is this price go to? 7,000. So I already explained psychology level, right? Round numbers. Round numbers that human beings are comfortable trading on these round numbers. That is why it's really important. So you can see trading view already help us with some psychology numbers on here. You can see it here on the right hand part. They already help us out. But just know the difference of 500. This is 66. Right. Let's add it up to this current price. 71. If you have any question, you can ask. If you think I'm doing something you don't understand, just ask, oh, what are you doing here? And I'll explain it. Alright, we're all here to learn and we're all
Okay,
here
for
to make
BTC
profits.
now,
I didn't hear you.
for BTC is not 50, difference of 50 is 500.
Yes.
I mean the psychological number.
Yes, is you can say is it now why it is different in here is because there's no decimal. You can see BTC does not have a decimal point, right? For other pairs, you can also say different of 500 because there's a decimal point. 500. If you say 500 after decimal point, you can also call it 50. You can also call it 5. You understand?
Oh,
For after decimal point, zero is nothing, right? After a number after decimal point, zero is nothing. So you can call it 50, you can call it 500, you can call it 5, right? So I can say for the pairs, it's a difference of 500. I can say for all the pairs, just because for the sake of this BTC, right? Because BTC is a difference of 500, so I can also say for all the pairs, it's a difference of 500. Do you understand?
okay.
So you can see, trading view already
Yeah,
help us to target out 500, 600, you can see. That's why trading view is really helping for analysis. To just help you show you the psychology. Like if you want to enter a trade that you don't actually know the psychology level, trading view could just go to the 4 hour time frame. Zoom in the 4 hour time frame. Trading view will help you out to show you this is psychology numbers. But make sure you do it on the 4 hour time frame. That's something else. Let me add this one again.